Thank you for tuning in. Our next presenter is Rob Chase, Executive Chair and CFO of MediaValet. Mr. Chase, you may begin.
Thank you, operator. Good afternoon, everybody, and thanks for joining in on the MediaValet presentation. I'll jump around some slides here and try and give you a quick overview before opening up to some questions, and look forward to some good interactive questions along the way. You see on the screen here the safe harbor statement, which applies, as you know, in all of these presentations. We'll do our best to keep everything. Obviously, everything will be information that's available out in the market. But anyway, happy to give some additional color. Just quickly going in here, a little bit of a background on MediaValet. So we're in the enterprise digital asset management space, and supporting marketing and creative operations teams with their initiatives as they execute on their digital strategies. And as you know today, with particularly with the changes that we've had from COVID, we're seeing a more rapid uptake of SaaS and also obviously cloud computing, and then with that, everybody going digital, everyone going remote with work from anywhere means you need to rely more on your digital persona to convey and inform your customers, your employees, your stakeholders, partners, etc. And the more that happens, the more you need something to hold all of these digital assets that you create to convey your messages, and to connect those to where they need to be, whether that be with your people or with various other marketing stack of tools that you reach those audiences with. So it's a very complicated equation and very difficult to accomplish. So what that means is people need something like a DAM, digital asset management platform, to hold all of those assets and to enable these marketing and creative operations teams to execute and their companies to win. So that's the space we're in. MediaValet itself is 100% cloud-based, built exclusively on Microsoft Azure platform as a service. Many of the companies you'll see providing SaaS often will be using infrastructure as a service, so they'll put it on Amazon Web Services or something, but basically they'll build a system in some other language and then port it to the cloud. We actually develop right in the cloud, right in the Microsoft Azure cloud. It's a form of .NET, and gives us some great flexibility advantages and some enterprise advantages that help us to provide the fastest, most secure DAM on the planet, which for our market segment is very important. It's a B2B business model. We have an inside sales team, our own direct marketing team. We reach out to the market, generate pipeline, and grow our business that way. And indeed, every quarter we've been growing our business quite nicely. You can see here from this slide, gives you a quick little snapshot of how we've been doing. Sorry about these animations, folks. They take a little while to kick in. But this is a depiction of our annual recurring revenue as a SaaS company. Obviously, annual recurring revenue is a huge thing for us. It gives you great insight to the future billings and invoicing to existing customers. It is the sum of all of our current under contract customers, what their annual billing amount is. So we were at $7.9 million at the end of Q3, 37% up year on year, as you see there. Gross margin is very strong. It's spread across a large number of customers, sort of average $21,000 or so US per customer per year. All of our employees are in Vancouver. We now have 58. We were 44 at the end of last year, so we've increased to another 14 people in 2020 as we seek to go and grow into and tackle a bigger portion of this exciting digital asset management market. These bars here represent the growth trajectory of our recurring revenue, and you can see kind of in the early years, I don't know if you can see on your screen well, but this is Q1 2015, all the way to Q2 2018 here. The growth is decent, but you can see since then it's been an inflection, and that was driven by predominantly a couple of things. One is we rewrote our entire back end of our system and relaunched that in May 2018. And really that made us very cutting edge and truly helped us deliver on our enterprise class vision. And, consequently, we've had a better mousetrap, if you will, to go sell into the market since then, and one that really, really delivers on our mission. So obviously our win rates are going up, and obviously the amount of opportunities that come to us are increasing because we're standing out more and more as a leader in the space. The same time around that era, May 2018, we also relaunched our go-to-market strategy with how our sales team conveys the message and the narrative around who MediaValet is, really targeted at our target customer group being, sales and marketing, particularly marketing and creative operations people within any organization. And indeed, if you were to have a snapshot of our customer base, you'd see it spans all industries, whether that be government, education, tech, tourism, travel, manufacturing, etc. There's really no customer that isn't no company that isn't a potential customer out there. As long as they have a sales and marketing team and they're trying to have a digital strategy to reach their market, at some point they're going to need a DAM. And in fact, actually, just in December we announced a $100,000+ a year customer. Which is an airport authority, right? So, not your standard that you might expect. This airport authority had 20 terabytes of media that they were trying to manage and make sure got to the right place at the right time with the consistent right branding. All of that media was residing, some of it in SharePoint, some of it in Dropbox, some of it on local drives. We're now helping that organization take all of those assets, put them into one place and connect them digitally to everywhere they need to be so that they, significantly reduce the time that marketing has to spend in managing all of these things. And what you see as a result when customers do this, and it's an interesting point, first of all, that again, this customer did not have a DAM. So what we're seeing in the DAM market, why it's growing so incredibly well, is because, it's a greenfield opportunity. These organizations try to get by without a DAM as long as they can, but at some point they just have to move over. So, 80% of our opportunities that come to us today in this market are still greenfield, and there's plenty more to go. And the reason they're making that move is, according to IDC, if they implemented DAM through bringing all of these assets together, making them searchable and at everybody's fingertips and connecting them to your marketing stack of tools, you'll have an 85% reduction in the cost of your digital media materials. So producing them, managing them through their life cycle, making sure they're the right place, right time, and making that all automated as opposed to being heavy lifting by employees. 85% reduction in the cost. I mean, the system will usually pay for itself in the first year just in the cost savings. And then at the same time, if you're consistently marketing and branding and you're more on point and quicker to market with those messages, IDC expects you'll have a 25% increase in revenue as well. So we're really working on both sides of the equation here and providing not only a cost savings to these organizations, but also an increased revenue opportunity and delivering something to them that really in today's age, with everything going digital, they can't live without. And, just as a result, what we're expecting in the market here, as you look at the DAM market, is basically, we estimate it's about $3.5 billion industry today, and that it's growing to $7.5 billion over the next few years here to 2024. That's according to Markets and Markets. Whether or not those numbers are exact, obviously they're broad estimates, but what we can tell you is it's a very demand-rich environment. We're seeing, being able to reach customers and opportunities for our sales team at a very low cost. In fact, in 2019, our customer acquisition cost was 87 cents on the dollar. So for every 87 cents that we spent in sales and marketing, we generated $1 of new business. In 2020, with the COVID impact, Year to date, we're around the 125 mark, but so $1.25 spent in sales and marketing to generate $1 of new business. And interestingly, in the SaaS industry, that's extremely excellent metrics and enviable. And oftentimes SaaS companies will be happy spending 2x, $2 to get one, because these are 10-year plus customers, giving you a nice recurring revenue stream with that high growth margin. So we're very happy to be at that level, even in the face of COVID here. So that's exciting for us and gives you an idea of the demand-rich aspect of the market. Quickly here, looking around the globe, we do have global reach with our system. Again, we're on Microsoft Platform as a Service, so we're actually able to light up data centers instantly around the world from our office in Vancouver and provide data residency guarantees to customers all around the world, which enables us to sell everywhere. And we do all of this selling from Vancouver, and we market digitally, obviously, and that has global reach. So a lot of opportunities come to us from EMEA and Asia Pacific, and we're able to service those simply and easily from Vancouver. So as we get opportunity to invest more in our international sales strategies, there'll be more opportunity to drive that. But today, so much greenfield for us in just U.S. and Canada that we're happy to keep servicing international on a responsive basis today. The DAM market itself, is really, we see it as made up of a few components, if you will, within this industry. The overall DAM itself, where we started, is really for managing the finished product. So the media assets that get created by your creative teams, once those are complete, they go into the DAM, they get connected to the rest of the organization. Another component of this market is creative asset management, which is supporting the creative operations teams as they go and, say, work with a 30-minute green screen video in order to create a 30-second commercial. Well, the commercial will live in DAM, but the company needs to look after that green screen as well, because they may need to reuse it, and they don't want to have to go and redo another $12,000 photo shoot or video shoot just to instead of using what was already created. And often that's what happens because people lose track of these assets. As you can imagine, if they're all over the place, some local, some in SharePoint, some say in Dropbox or something like that. So, so bringing that into the fold here, very important. We have a component of our module for our system called Creative Assets, which Creative Spaces, which enables the creative team to work within the DAM in a hybrid on-prem type environment that keeps all of those assets connected to the company's DAM so they never lose them, but also gives them a low latency and private environment for the creative team to work in until they're ready to reveal their products. Also within this space, there's MAM, which is, media asset management. That's for video, 4K, et cetera, and EVCM, which is enterprise video content management, which is more your streaming type video. And we're busy executing on our roadmap to go and address all of these components of the DAM market and to make sure we're differentiated within each so that we can win a lion's share of this market over time. Sorry, just continuing on here. So at the end of the day, really what we're focused on is being able to do the entire core DAM equation for companies so that all of their digital assets, right from the very ideation stage all the way through the entire life cycle to archival, is covered by MediaValet. And so it's a vision we expect will do us very well over time, particularly against competition who isn't quite as focused, we believe, on the core assets themselves and the solution providing that we're known for in differentiating within this market. Just quickly here, leaning in, want to talk to, we've been investing, obviously, I mentioned earlier, we've grown to 58 employees at the beginning of 2020. Every couple of years, we usually do a step increase in our spend and operations, and it usually takes a couple of years to get to cash positive. So if you did a step increase at the beginning of 2020, you would expect to exit 2021 on a cash positive basis. Traditionally we've managed our spend to ensure that we don't have to do additional raises in order to fund it. We can live within what we have. That's how we approach 2020. And the areas that we're leaning into, customer success. In 2020, we finally added a customer success team. Traditionally, we've just been responsive with our existing customers. This enables us to go on operate more intensely to make sure they're getting the maximum utilization of the system, but also that they are we're able to identify and grow those customers where expansion opportunities exist, whether expansion of your core DAM or adding on modules that increase the average contract value. So that's an area we expect to start getting our net retention levels up over 100% over time as we roll out best practices in customer success. We're also leaning in and growing our sales and marketing team. We had 4 salespeople at the end of 2019. 2020, we've taken that to 6 people. 2021, I expect we'll go to 7 or 9, somewhere in that range. But, we're growing our marketing reach and expanding the ability to produce more revenue. At the same time, we're investing in R&D, expanding the team size, and really focused on what features can help us win more in this market and differentiate us. And we've got a long roadmap of opportunity to execute on there. Quickly, financial perspective, Q3 results. We've got our Q4 coming out, hopefully in March. But in any event, solid revenue growth for the year, run rate about $7.5 million for fiscal 2020, and just the year 54% up year to date. The recurring revenue up 37%. Most of the revenue you're seeing is coming from the recurring revenue. In times of rapid growth, that percentage will drop down a little bit. As you saw in fiscal 2019, it was at 89% versus 93% year to date. For fiscal 20, we had a great growth year in 2019 before COVID hit. Expect we would have been there without COVID as well, but certainly happy with what we're seeing in the market for the demand for our product. A couple other key components here. We did exit Q3 with $5.3 million of working cap, raised $11.5 million in a bought deal in Q4 that was oversubscribed. So that puts our pro forma September 30 at $15.9 million of working cap. So we've got ample capital to go and execute on our mission here. Very happy to be in that position. Quickly, want to give you guys, folks, a little bit of idea of, again, this is really just to give a baseline idea of the power of SaaS, right? So what happens with the recurring nature of our revenue? And really, what you see here, the third bar in is the trailing 12 months to September 30. You can see $8.3 million of billings. The blue bar is the existing customer component. So what did we bill to existing customers? And the orange bar is the new customer acquisition part that our sales team was able to deliver. So very interesting when we start to look at this. First of all, existing customer retention, net retention was at 96% for fiscal 20 so far, the last 12 months. If we just continued at 96%, this is what the trajectory would look like of the existing customer billings. It's simply mathematical. If we can get that back up to 100%, which our investment in our customer success team would believe will enable us to do, that's going to say add another $500,000 or so just here on 2021, and obviously exponentially increase these ones out here, the other 22, 23 numbers here. And then the $2.8 million you see here for new customer acquisition for the period, that's 6 sales reps. Well, 4 sales reps did $3.5 million pre-COVID. And so, over time, I expect us to get them back towards that. But if they just did 2.8, this is what our trajectory would look like. So again, SaaS gives you this very good, view to the future of predictability. We can build upon this by obviously getting our sales team back to the same levels they were at in 2019, which we think is entirely possible. That was about 750 ahead. That would be 450 on our 6 salespeople, 4.5 million versus 2.8. And of course, we're going to be growing our sales team as well. So, we think we can build upon these, but it gives you a good idea how this business rolls forward. And with that, I'm just going to pop down here, quickly on, where we're at from a market cap perspective. We were at 294 back when this slide deck was prepared. That equates to about a 12 times September 30 ARR, just under 12 if you use the analyst consensus for December 30th, and likewise, last 12 months revenue. If you use the analyst consensus, is more like 12 times there, but really happy to see us in that healthy range. When you look at SaaS Capital, for example, they have their 10-year study of the SaaS industry of public and private companies. Companies with our growth rate have about 11 to 13 times trailing revenue multiples. So we're right in the historic average. I know there's some companies that are trading multiples of this. Many of the smaller SaaS companies seem to be more even at some at the 30 times level for trailing. So it's a little crazy in my opinion, but I'm really happy that we're sort of in a standard level at the moment relative to history. Also pointing out on this slide, we have 31% is insider owned. I've got about 7% myself, and we had about 41% institutional. So that's a quick snapshot of MediaValet, and happy to field some questions here and jump around the deck, if you will, as we to sort of hit some of those, if it makes sense to do so. But I'd like to open it up to questions at this point.
Great, thank you, Rob. Our first question asks, what are 1 or 2 things that investors should look forward to in 2021?
Great question. I think what we try to do is give good examples of customer wins that kind of speak to what our mission, right? So obviously we're out there to do enterprise, mid to enterprise type customers. We're out to increase our average contract value and grow our customer base. So I think watching for some of those exciting customer wins, and hopefully we'll get a couple of those on the existing customer side, just as we did last year, that we can announce also. We had some nice big expansions. For example, NVCU is a great customer of ours. We won them in 2019. It's a $500,000 initial order. They added another $150,000 a year US of recurring revenue in 2020 as well. So we do have some of these large expansions. Just shows you that we can get back to that 100% net retention level, and B, that you see some of the new customer announcements that we'll continue to see that sales team executing and heading toward the potential, which, as I said, could be very exciting for us relative to that trajectory slide we mentioned there earlier. So yeah, I think those are the main things to focus on at this point.
Great, thank you. Our next question asks, who are some of our biggest competitors and who do we typically come up against in the market?
Great question. So this slide kind of speaks to that a bit here. Oops, sorry about that. So yeah, if you will, here on the right, this is the buyer's guide from Gartner. And as you can see here, hopefully you can see on your screen, MediaValet is there up to the right. We've got, Gartner has us pegged right in that sort of mid-enterprise where we're targeting, which is good to see. Also see this as very flexible ability to handle multiple divisions and global operations very well. So we're really happy with where we're positioned there in this market. Our main competitors are these ones with the blue circles around them. That's Adobe right here at the top, if you can't see it. For our enterprise class customers, we come up against them a lot, and usually, our marketing effort is geared towards us finding organizations that are interested in best of breed. IT solutions, and when we get into best of breed head-to-head with Adobe, we will more often than not win those opportunities against them. MBCU is a prime example. Massive account for us, obviously. Great win against Adobe head-to-head. We were the final two. Adobe, if you're a Adobe Suite customer, meaning you pretty much create only an Adobe Suite and that's what you use every day, then the Adobe Assets digital asset management capability solution is not a bad idea for you, and we will win less of those types of opportunities. But if it is best of breed, we're most likely to win, and sometimes we'll win the Suite ones as well. So happy to compete against them. We feel our product's way better and more value for money. Theirs is very complicated to implement and requires a full system integrator consultancy to go and put it in. The other circled ones down to the left, Widen, WebDAM, and Binder. Binder actually bought WebDAM, so we'll see WebDAM go away fairly soon here, but they're really more of SMB-focused type organizations, and what we often see is when companies buy something, they feel like they're buying a product that is here's what you get. That's it. You get what you get. That's it. And we'll build whatever we think makes sense for you in the future. But they're not really interested in listening to what you think makes sense, right? So they're seen as very plain vanilla as a result, whereas MediaValet, because we're looking to that mid-enterprise space, we're seen more as a solution. We really collaborate with customers and take their needs into consideration as we build our future. And we just think that's a better way to go. But as a result, we're really seen as a solution provider, and we do things like unlimited support. So we can make sure that you can adopt this across your entire organization. They'll charge by seat. We're not going to nickel and dime a customer because we know that if everybody's using it, that the amount of MediaValet they need is going to increase significantly. And also, of course, we have best-in-class security, speed, redundancy, global accessibility. So we beat them in a lot of these aspects. But, day-to-day, we fight it out with these folks, and we win on being a solution provider that's nimble and providing a real differentiated product relative to our competitors.
Great, thank you. Our last question here, while we have just a couple minutes left, asks about the impact of COVID on the DAM market. Is it fair to say that COVID has expedited a trend that was already in place?
Absolutely, great question, and no doubt it has. I mean, obviously, when COVID hit, everybody was, taken off guard. But the, interesting, we had in January 2020, we had just done our expansion, right? And we had to think long and hard. Wow, do we keep investing in light of COVID? And the answer was absolutely yes. Because we're going to emerge from this. We want to emerge much stronger than when we went in. There's such a large market for DAM already. The trends of digitization are strong, and our thesis was that COVID would ultimately increase that. It'll push more people to cloud faster. It'll push more people to realize that they need a digital asset management system. And 80% Greenfield just talks to that. Look, these organizations are waking up to this fact. And so ultimately, we see great pipeline activity as a result, and have throughout the COVID cycle. The thing that's changed in the short term is taking longer to get deals done. I mean, we announced a deal in September that was Saipem. They're an oil and gas company. That contract was on the CEO's desk for signing on March 31st, 2020, and it wasn't completed until September 30th, 2020. So all that changed in that intervening period was the start date of the contract. So, it has delayed the cycle. So usually our sales cycle is about, below 90, 85-ish days. In COVID, it's been more like 125. And, we'll see that come back down as people normalize more, but they're still in a bit of that, the buyer's still certain of what their new cycle is for their processes for completing their buy. So, you know, it's been a tumultuous year for people, which is delayed or slowed our growth somewhat this year, but we think that there's pent-up demand because we see it at the top end of the funnel.
Great, thank you. That's all the time we have for today, so I'll hand it back to the operator to close up shop here.
Thanks, everyone.
Thank you. That does conclude this webcast.